We had a good period, good first half for cash realizations. At the beginning of the year, we set an internal target of about 50 million for full year 25. And so obviously the first half performance and our momentum going into half two gives us, a high degree of confidence of achieving that and possibly even exceeding it.
Hello, you're watching Proactive. I'm joined by IP Group CEO Greg Smith. Greg, great to speak with you this morning. You're out with your first half results. Could you give us a brief overview of your performance?
Good to see you, Stephen. We made strong progress in the first half. I would say we were pleased with some encouraging portfolio developments and also this pipeline of significant milestones that are building through to the end of 2027. Couple of standout examples were the IPO of Hinge Health on the New York Stock Exchange and Oxford Nanopore beating guidance with its first half results. So that was very good. Secondly, we remain confident in our target to deliver over 250 million of cash exits by the end of 2027. And we achieved 30 million of realizations in the first half. That's sort of 9 times what we achieved in the equivalent in 2024. And then importantly, I think from a shareholder point of view, our NAV per share stabilized. So it was down a little bit to the half year, but at the time of writing, at the time of these results, we're up at about £1, thanks mainly due to recovery in some of our public company shares. And then I think the final thing to add is we're seeing increasing momentum around our efforts to add to our private scale-up capital. And we have good confidence of securing at least one new mandate by the time I talk to shareholders again as part of our full year results.
Just drilling into the detail, Greg, you mentioned your NAV per share has stabilized and even ticked up post-period. What gives you confidence in sustained recovery?
Yeah, I was reflecting. I was reading my FT on Saturday morning. I almost sort of choked on my yogurt. As a man of a certain age, you don't do cornflakes anymore. You've got to do yogurt. But I was quite sort of surprised to read the headline. The US market for IPOs has exploded back to life, the busiest week for 4 years and all that sort of stuff. And I think a rewarding thing for us was, of course, the Hinge Health IPO and the fact that they've released a fantastic set of second quarter results. And so that's traded up almost sort of 80% since the IPO. So that was very good. So I think that public market's a bit of improvement in that IPO window. Firstly, there's a sort of direct knock on to our performance, but I say it more in the context of it offers a bit more liquidity for private investors. That means there's more private capitals that come back into the system, and often scaling quoted businesses can be quite acquisitive as they sort of bolt on technology, and that can be helpful for our portfolio. And I think that's a theme. We've seen a bit more M&A interest in our portfolio over the course of the first 6 months. So that gives us confidence for the next 6, 12, 18 months ahead.
Greg, you mentioned that you generated 30.3 million of cash proceeds so far. Your target is 250 million by 2027. How achievable is that?
Well, I hope I have a reputation for setting targets and then delivering against them. We had a good period, good first half for cash realizations. At the beginning of the year, we set an internal target of about 50 million for full year 25. And so obviously the first half performance and our momentum going into half two gives us, a high degree of confidence of achieving that and possibly even exceeding it. I think of those exits, 2 were outright company exits, and we traded down a bit in one of our public companies, Centessa, another one listed in the US. And then I think at the time of the IPO for Hinge, we realized a small amount of our holding. And the balance since then, as I mentioned, has gone up by about 80%. And our 6-month post-IPO lockup expires in November. So we've got good confidence for the second half, and indeed how that feeds through into our sort of targets and ambitions out to the end of 2027.
With 14% of share capital retired to date, how do you balance buybacks with reinvestment into the portfolio?
Yeah, it's a very good question, that, Stephen. And it's one that we spent quite a lot of time at the board discussing, this balance between, at a big discount to NAV, it's hard to argue there's anything more compelling than investing in our own portfolio at a discount. And we're very confident that we're going to deliver returns on a NAV per share point of view. However, that said, there was a contribution year to date of I think it's about 4 pence per share from using a proportion of our capital to buy back shares in the market. And I think we've now retired sort of 14-15% of our share capital since we started that program. And as that plays out over the longer term, I think that's going to be very accretive to our long-term shareholders. I'd say the balance comes with the amount of new investments that we're doing on balance sheet. Most of our sourcing at the moment is being done through our differentiated sourcing engine, Parkwalk. That's off balance sheet capital. And so I'm not worried about the pipeline, but certainly the balance has been to prioritize capital into the existing portfolio and into buybacks. And as we start to see performance move, hopefully we'll be able to take advantage of some opportunities to add to the portfolio.
Greg, with capital availability still challenging, how well funded are your key holdings to reach their next milestones?
Another great question. So sort of to put it in context, first of all, the portfolio as a whole in the first half raised about 370 million of capital, which is almost the same level as we saw in the first half of 2024. So there's still healthy amounts of capital being raised by the portfolio overall. One of the disclosures that we make every half year is to look at the funding requirements of our portfolio. And one thing I'd pull out is that almost 2/3 of our portfolio is financed out to the end of 2026. So don't need to raise money until 2027 and beyond. So that's a good position. It's probably reasonably typical for us. So there's no sort of material change in the overall funding profile. And then on the subject of milestones, obviously ensuring that businesses that are the highest value opportunity for us are funded through to those milestones. That's why it's important that we maintain some cash balance. I would say major milestones to look out for will be the commencement of Istesso's next trial, and they're going into another exploratory trial, phase 2. That should happen before the end of the year. Of course, we've got Nanopore after they had a good first half, full year performance. We're quite confident around their full year performance. Hysata, the world's leading electrolyzer business, they will hopefully have first hydrogen, not just in their own proving plant, but with one of their commercial partners in Saudi Arabia. We've got a few funding rounds coming up across businesses like Otsa and a number of others. And then maybe we'll have some exciting news from our nuclear fusion business, First Light Fusion. So we'll look forward to updating our shareholders on all of those in due course.
Greg, I hope you'll continue to keep us updated with your progress as well. Thank you very much for speaking with us today.
Thank you, Stephen.
Greg Smith, CEO of IP Group.